Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at 4 stocks that can literally 10x your money according to analysts. Now, I want to add that these stocks are hyper risky. These are high risk, high reward plays, so please be careful when investing in these companies and always make sure to do your own research. But without further ado, remember to go and smash that like button for more videos like this one, comment your thoughts down below on these stocks, subscribe if you are new, and now let's get right into it. So our first stock is going to be SRGA, ticker symbol SRGA. And SRGA is first on our list because this is a stock that can literally 10x no problem. This stock is going to be the first one on our list because overall it has a very bullish sentiment according to various analysts. This company is a medical technology company that designs, develops, and manufactures various biologic and synthetic implants, including its cervical spine fixation system, and that's what they're most known for, which is why we have a picture of a spine up here. This is going to be under recovery plays because during the lockdowns, a lot of people couldn't actually go in for surgery to receive various biological, metal, or even synthetic implants. So now that the lockdowns have actually cooled off and that we are not anticipating any future lockdowns, the revenues for this particular company are supposed to start ramping back up because millions of Americans have been putting off their medical procedures, including various surgeries, and this has negatively impacted SRGA's revenue. It impacted the revenue so much that they actually ended up having a giant net loss. However, the company is inching back toward profitability, which is fantastic news, and that's a reason why analysts really like this stock. Before the lockdowns, SRGA stock was trading at around $4 per share. However, now the stock is clearly a penny stock, and analysts think that the stock could easily surge back to $4 per share. So let's take a deeper look at this company. So over here on Webull, we just have to type in SRGA, and you can see from the 5-year growth chart that the company has been downtrending extremely poorly. And this is what I'm talking about high-risk plays right here. We really want to find the bottom. However, from the chart, you can see that SRGA has actually surged up multiple times just to fall back down. So you can see we hit a bottom, and then the price surged, and then we hit a bottom, and then the price surged, hit a bottom, the price surged, and this pattern has been repeated throughout literally the entire 5-year history of this stock. So it's really about timing this bottom right here, which is very difficult. So this is not a long-term hold. This would be a stock that you would buy, wait for it to surge up, and then you would sell somewhere at the top. However, analysts are very bullish on the overall stock, so let's go over to their price targets and price predictions for this particular company. On average, 5 analysts have covered this stock, with one of them saying to hold the stock, 3 of them saying to buy the stock, and another one of them saying that this stock is a strong buying opportunity. According to Webull, no analyst that they have surveyed said that this stock was going to underperform the market, and also no analyst said to sell the stock. Currently, the stock price for SRGA stock trades for around 34 cents per share. This is below their low-end price target of $1 in the next 12 months. Their average price consensus is $2.70 per share, and their high-end price target is $4 per share. This would mean that the stock could more than 10x in the span of just 12 months. However, let's look at this company a little deeper to see their EPS and earnings per share. As you can see from their historical graph for the last 4 quarters, we can see that they have actually beat their EPS by a substantial margin. The light blue is where their estimate was supposed to come in, and the dark blue is where their actual estimate for EPS came in. So for quarter 4 of 2020, they beat their predictions. For quarter 1 of 2021, they also beat, and these beats have consistently happened for the past couple quarters, except for quarter 3 of 2021, where we had a slight earnings per share miss. However, for quarter 4 of 2021, they are anticipated to at least match their overall estimates. And this is why many analysts think that the stock price could find a bottom soon and then surge up again, which would be a fantastic trading opportunity. Many institutions are very bullish on the stock because around 141 various institutions, according to Webull, actually own this company. They own around 34.18% of their overall shares. So it's always good for a stock to have a major institutional backing on top of many retail investors also using the stock as a fantastic trading opportunity. Now I want to move on to our next pick, which is ticker symbol CWBR. CWBR, and CWBR uses its proprietary platform and technology specifically for research and development of mitochondria-based therapeutics. And if you don't know what that is, basically your mitochondria is the powerhouse of the cell, so they are using this mitochondria-based therapeutics to fight chronic and age-related diseases. And diabetes, cancer, and obesity are gigantic markets, so if they could really hone in on their technology, this could be a fantastic company. However, unlike the company that we just talked about, SRGA, CWBR is a pre-revenue company. So CWBR has not produced any revenues right now, and investors are anticipating future revenue growth and even future revenue generation. SRGA already has revenues and earnings per share, however, CWBR does not have any revenues. So currently investors are using this as an opportunity to get in and to invest into a very speculative company. However, this company could easily 10x your money. I also want to add that this company's mitochondria-based therapeutics have not yet been in clinical trials. They are currently in phase 1 of their trials. However, they did receive fantastic positive results from their trials back in October. So their mitochondria-based therapeutics does have fantastic potential. However, we are really going to have to wait for their clinical trials to see where this company actually is. But in the meantime, during their phase 1 trials, phase 2 trials, and their clinical trials, these act as fantastic catalysts that absolutely ignite the stock price. So this could be another company that you could either hold long term or that you could trade off of. So now that you know a little bit about the company, what is the stock currently trading at, and what do analysts think of this company? So right now, 4 analysts cover the stock, and they all have a 100% buy rating for the company. The stock currently trades at 30 cents per share, with the low-end 12-month price target coming in at $2. The average price consensus among analysts is $4.12, and the high-end price prediction is $7 per share. So technically, this company could 20x in price if the most bullish analyst estimate actually comes true. But how interested are institutions? Well, institutions currently own around 16.3% of this overall company, while their insiders own around 16.09%, and it's always really good news to see insiders holding more than 10% of this overall company, because that means the insiders are very confident about the company's future potential, and that's why they are holding on to their shares. We also have retail investors and others holding around 67.61% of this overall stock, but I am personally the most bullish on the insiders holding around 16% of this company, which is fantastic news. Now I want to talk about our next stock, which is going to be Team Inc., ticker symbol TISI, and this company is an engineering outsourcing company that provides inspections for various industries, including the energy industry, manufacturing, and specifically infrastructure. This company has pulled back dramatically as of late, and they are even under threat to be delisted from the overall New York Stock Exchange. So let's read about that. On February 2nd, Team Inc., ticker symbol TISI, received a written notice from the New York Stock Exchange that the company is not in compliance with their listing standards. However, how the company circumnavigates this problem is instead of doing a stock split, such as splitting one share into 8 shares, they can actually do a reverse split, where they can take 8 shares and turn it into 1 shares, and this boosts the overall stock price. Currently, the company was given 6 months to regain compliance with the New York Stock Exchange rule that the company has to trade above $1. So this is a very easy fix that the company could just operate a reverse stock split and increase the price over $1 again. So until then, the company is going to be closely monitored, and this would also actually be a catalyst, because a lot of the times when a stock split or a reverse stock split takes place, investors pour into the stock to trade off of it and to trade off of its overall momentum. TISI currently trades for around 68 cents per share, and like we saw in CWBR stock, the overall stock price has been downtrending for the last 5 years. So according to the historical data, this is a hyper risky stock. But this has not deterred analysts from being extremely bullish on this company, because again, this stock can 10x according to analysts. Right now, one analyst covers the stock, and he has a clear buy rating because he says this company should be worth around $13 per share, which provides a huge upside from what the stock is currently trading at right now. But the reason for the stock price falling over the last 5 years is that they have had very underwhelming earnings reports. For instance, their EPS has literally missed their targets for the last 4 quarters. So eventually, when they can either meet their estimates or exceed their estimates, this could ignite the stock price to shoot up. And if this particular analyst is right, the company is is extremely undervalued because it's trading less than $1 and it has a $13 price target, making the stock a clear 10xer. According to Webull, right now 180 institutions currently own this company, and institutions own in total around 83.97% of this company. So unless institutions know something that investors don't, I would say this is actually a fantastic company to get into because a plethora of institutions are extremely bullish on this company, which is why this particular analyst gives it a $13 price prediction despite the stock downtrending for so long. Now the final stock that we're going to look at is named TSHA Gene Therapies, ticker symbol TSHA. And this company deals with very rare diseases. However, their treatment, which is currently called TSHA-120, has been effective in staving off GAN disease. And if you don't know what GAN disease, we can just fill you in right now. GAN is basically a rare inherited genetic disorder that affects the central and peripheral nervous systems. So basically, this is a nervous system disease that attacks your nerves as well as your overall nervous system. And right now, the company is actually very impressed, along with shareholders, that this treatment is effective in GAN disease. But this treatment will still have to go through much larger studies, and it will also still have to gain FDA approval. But like we said earlier, these approvals and these tests, if they come back positive, could act like fantastic stock price catalysts, which could cause the stock price to surge. Directors and owners of this company have also been buying up more stocks. For instance, 10% owners of this company bought up $1.5 million worth of stock, and directors of the company bought around $103,000 worth. So it's always good to see insiders and owners doubling down or buying more of this particular company. Now, just like one of the other companies we talked about, this is a pre-revenue company, which means right now, because their therapeutics and their treatment hasn't been FDA approved, it means that they can't actually sell this particular treatment, which means that no money is coming in. So investors are speculating on the future projections and the stock price and revenues, earnings per share, and cash flows of this particular company. But some of these investors are willing to take on the risk because if they invest into this company now and it eventually becomes profitable, this company could be extremely lucrative, especially if you get in very early. What's also really good about this particular company is that they specify in rare diseases, and the FDA has been very lenient on accepting and approving various treatments and therapeutics when it involves rare diseases. The reason for this is because not a lot of people have these rare diseases, and this means we don't really have a giant sample size. So if this therapy or treatment is effective just on around a couple hundred people, the FDA could actually approve this specific treatment and or therapy. The company is also developing a novel platform for AAV-based gene therapies, which is adeno-associated viruses. And this platform actually say that the initial results from their TSHA-120 works extremely well. So this is overall very bullish news for the company, and it's not even real speculation to say in the future that this company could achieve FDA approval, which would act as a fantastic catalyst. But what is the stock price currently trading at? Well, currently the stock price is $7.61 per share. But if we look at the 5-year graph, again, it is downtrending extremely aggressively. But despite this, the stock could easily perform a reversal based off of these FDA approvals, or if the company can actually start marketing their various therapies and treatments for GAN disease. Out of 13 analysts, 46% of them says this company is an extremely strong buying opportunity, and 53% of them just says that this company is a good buying opportunity, while none of these 13 analysts say to hold the stock, that this stock will underperform, and no analyst says to sell the stock out of the 13 analysts that Webull surveyed. So what about the analysts' price targets? Well, currently the stock is trading at around $7 per share, and the low-end 12-month price prediction for the stock is $28. The average price consensus is $42.50, and the high-end price prediction is $60 per share, which is absolutely phenomenal. So you could easily almost 10x your money specifically for this honorable mention. If we look at their earnings per share, we can see that it is underwhelming that their actuals are coming in below their estimates for the past 4 quarters, and we also see that their EPS is downtrending right now. However, this could easily reverse once the company actually starts raking in and marketing their therapeutics and their treatment, specifically their TSH-120, which would give the company more revenues, which would increase their free cash flows, and thus lift their EPS. And overall, this is a solid company, which is why 46 institutions own this company, with corporations corporations owning around 2% of this company, and insiders own 27% of this company, while others like retail investors own 34%. So overall, we see very strong institutional presence of owning 35% of the company, and extremely confident insiders, which own almost 28% of the company. Insiders specifically own around 27.93%, which is fantastic news. So overall, this is very bullish, and the stock price does have that 10x potential according to analysts. But I would love to hear your thoughts on these companies that can 10x your money in the span of just 12 months according to analysts. Remember to go and smash that like button for more videos like this one, subscribe if you are new, and I will see you in the next YT video.